Good evening, friends. Hello, everyone. I hope I'm audible.
Hey
I'm
Kaustav,
Manthan.
hey Manthan. Hi everyone.
Yeah, hi friends. Hi Manthan.
So, thank you guys for joining, like without any notice, right? So, the agenda for today would be to discuss about the market is moving. The budget has disappointed the street, right? But we think that the expectation was too high. And in today's agenda, we will discuss about how results are planning, where we are in the phase of the market, and how the budget has been for investing community. So with that, I will hand over Prince. Prince, we can start.
Yeah, hi. So, hi everyone. Good evening. I hope everybody is doing fine. I know all of us being, more or less full time, or you can say passionate investors are very curious when it comes to budget. And recently, there is a lot of negativity or pessimism about the budget, right? And the bigger thing which we miss out of this is looking for the nuances of what actually the budget mean to you, right? We pick selective few things and make hue and cry about those things. Again, not getting into rights and wrongs of that, but again, that is the very human behavior. We all have such tendencies to focus more on one thing rather than finding out what really matters, right? So during this conversation, we'll try to touch base various aspects of this budget which we have gone through, because we do not believe in talking anything which we ourselves have not gone through, because that doesn't make any sense, right? The idea is to add value, and it is always a two-way communication, in the sense whatever we interpret or study, we share transparently with you. And if there is any furtherance, any difference of opinion also, and maybe different understanding on that part, we happy to take those questions or inputs from the audience, because that makes a perfect conversation, and that's the beauty of this platform, right? So again, I think Kaustubh, we shall. I'll be asking a few questions which I have to my mind. So anything before we start, if you want to set a context, then again I'll come with my set of questions to you.
Yeah, good evening everybody. Thanks Prince for setting the context and what the space is about. And of course, the few things that I could read in the last 24 hours after the finance minister put out the budget. Okay, and there has been a market reaction. We can first maybe discuss about those, and then of course we can get into the markets, portfolio construct, precious metals, and other things.
Right. So first question, because that is the talk of the town since the budget was announced yesterday, right? The SST increase, right? It is for the F&O futures and option, not for the main cash segment. But why we as a market cumulative giving so much of negative reaction, especially yesterday, if not today? So what's your reading on that, and what are the nuances we as a market participant should be knowing about?
Yeah, I think this should be the first question because I think other than this, at least the market participants did not get any increase in taxes, which in a way is good news because in the last 2 years, whether it was LTCG, STCG, LTCG introduction, things were going up. So, as a seasoned person who has been looking at budgets for more than 2 decades, let me start with a standard statement. So this is a good budget for Viksit Bharat and long-term fiscal prudence. But the problem is, even if you had no expectations as a capital market participant, you would still be disappointed a bit. So let us understand why. Okay. So Prince, you are technically correct that on the cash segment where investing as well as trading happens, okay, the STT has not been touched. Okay. But let us look at the layered understanding of the big jumps in STT on the F&O segment. So why are these big? Because for the future segment, the current rate of STT has gone up 150%. Okay. 50% for options premiums and 20% for the exercise of the options. Now, this move, as a justification from the government side, it seems to be part of a multi-year effort to cool down excessive speculation by retailers in the F&O segment. I guess in the last 2 years, all of us, when we get into a trading account, we have to click OK. I am not one of those 91% who are losing money, and still I would want to do it, etc. But it is a slight misnomer that there is no impact on the cash market. Okay, so let me explain. So there's a much bigger fallout of such expensive moves when taxes, which are seemingly low, are jacked up by 150% and all. So first of all, STT increase is a dampener for high frequency trading. What does it mean? High frequency traders, or as they are called, scalpers, they have slim profits on a single trade with small margin strategies, and these immediately become viable for the 150% jump in STT for futures. So what happens is, they at least immediately they would start reducing their provision of bids and offers for stocks which are in the F&O space. As a result, the market to an extent for those stocks loses the depth, and generally this flow of bids and offers keep the prices stable. Okay. Now the point is, if the government really wants to curb high frequency trading, then there are other direct ways and regulations you can do for the F&O activity. But they have chosen a penalizing kind of route, which is a STT hike. Now there's a second category called arbitrageurs. These buy in the cash market and typically sell in the futures market for arbitrage gains. Now, due to this again big jump in STT, their tiny spreads, which are also for a very short duration, are likely to get almost wiped out. And these guys generally bring massive volumes to the cash market as well as in the futures market. But since we are focusing on the impact on the cash market, if this STT increase has really managing to have a big dent on their spreads, okay, then their activity is likely to come down, which means buying in the cash market will be lower and the volumes of the cash market will also be lower. And currently all of us know that there is very limited buying in the cash market. ऐसा नहीं कि बहुत selling आ रहा है, but buying बहुत limited हो गया, which is again a aspect of the low sentiment since the last few months. Okay. Now let's look at another important aspect of how F&O affects institutional investors other than the above two categories, which is mutual funds, FIIs, etc. Now, when these are very large portfolios in cash, they generally like hedging through options. Okay. And if what they would always do is, in any market, especially FIIs, would compare the costs of these options and hedging versus these costs in the other markets. Okay. And if they feel that these costs are not good enough, they would also rethink whether they can take open cash positions which can run in very big numbers or very big amounts. Okay. So as a result, again, there is likely to some extent to be an effect on the cash market if they decide that मैं ऑप्शन से हेजिंग नहीं कर सकता हूं और अभी के मार्केट कंडीशन में मुझे सिर्फ लॉन्ग ओनली पोर्टफोलियो उतना नहीं बनाना है. ठीक है. सो basically the whole point is, when you are in a roaring bull market, okay, this would have been taken in the stride. Now unfortunately the sentiment is already at a 2-year low, and at that time it certainly doesn't really go well with the how the market participants interpreted it. We all know that these are short term things, but then that's why the market was also kept open on a Sunday for all the reasons that we don't know, and then it has a strong reaction. So the government is almost trying to equate F&O trading and then putting taxes on it, like a sin tax on cigarettes. You also know what happened with gaming companies, right? Overnight the regulations changed and Dream 11 suddenly stopped. We also had all those casinos operating out of Goa, etc., which were change of regulation, they stopped. So there is always an option where the government can make stronger regulations to control something rather than just trying to penalize through more taxes. Okay. अभी दूसरा एक पॉइंट भी है कि अनफॉर्चुनेटली ड्यू टू द हायर एसटीटी, ओके, even the arbitrage funds, which is a kind of mutual fund, if their returns go down because they enjoy the arbitrage that we spoke about, like the arbitrageurs, okay, then they can, if their annual return, which can be 6 to 8%, goes down by even a couple of percentage points, then in a country like India, that might have a bearing on their attractiveness. Okay. We should also remember that the new kid on the block, which has been spoken for the last 1 year, which is the SIF, with a minimum ticket size of 10 lakhs. Okay. They are also going to rely on arbitrage and F&O hedging for their strategy. Because again, you see over here that for 10 lakhs, they may not be wanting a long only strategy. So this is all the layered understanding of wherever this increased STT will have an impact. It's very clear that over a longer period of time, a longer horizon, all this will be taken in stride because, as the markets go up and returns are there. But I believe there were better ways to control F&O trading. So that's about STT that I could gather the various angles.
Perfect. So, what are the main aspects related to the taxation changes in context of the capital market transactions? And it would be good if we can club this question, and you can also explain us the concept of tax holiday and safe harbor for the benefit of the audiences.
Okay. So I think first of all, let's look at the tax changes which look minor, but they might be important in certain situations. So if a retail investor or an HNI is holding shares of a company and the company decides to do a buyback of the shares, okay, then let's say you had bought something and you're a long-term investor and you had bought something in 2015, say Infosys or something like that, and the company goes for a buyback and suppose the price is triple now or double, okay, till day before yesterday, the entire gain got into your tax slab rate. So if you are at a 30% taxation, then that entire gain was taxed at 30%. So this is the good news, okay, which many may not know, that yesterday it has been introduced that this gain that would accrue to an individual investor as a result of buyback of shares is now going to get into capital gains taxation. So it will be a very normal LTCG, long-term capital gain, or short-term capital gain, depending on holding period. So under the example that I gave, it would be long-term capital gains and it would have much, much lower taxation compared to earlier. So that is good news. Then there is some good news for, TDS on dividend. So earlier what used to happen is if you are below the 12 lakh bracket, that is your salary is not subject to taxation, but you have investments in shares and the companies were deducting TDS on your dividend, then you have to practically approach the registry of each company, okay, to tell them that you are exempt and hence don't deduct taxation. अभी आपका जो form 15G or 15H है, if you just submit on the NSDL CSDL portal related to your demat account, then all the companies are supposed to comply and not deduct your TDS. Okay, so that is another good thing. Similarly, we all know that the new animal called TCS, tax collection of source, had come in to control the outflow of dollars from India to abroad. It was mainly put on travel, medicals, education, etc. So these have been reduced. So they were approximately 5% in most categories. They have become 2%. So these are some of the good things. The two bad things are, if you had gold के लालच में अगर आपने sovereign gold bonds you had taken from another buyer and not from RBI directly, which trading is allowed generally on the exchanges, then the normal issue of RBI is still exempt from taxation on the redemption. But if you are a secondary holder buying from a primary buyer, then now on maturity you will be fully taxed. So that is the bad news. Another bad news is borrowings against securities. Okay, so now there is something called LAS, loan against securities. When you are borrowing from against that and investing in further shares, then the interest cost for these borrowings against the securities, they could be set off against your dividend income. Now this set off has been taken off, which means whatever is your dividend income will continue to be taxed heavily. And this particular aspect of saving on taxation by claiming this has now gone away. So these are the smaller changes to the personal tax.
Thanks, Kaustav. So one theme which was, coming out and came to my mind, so that I'm be asking question around that. So data center theme seems to be getting big time support. So what are the main proposals, if there are any in the budget? Would appreciate some conversation around it.
Yeah, so I guess we have got the headline news, and the fine print will be important. But again, data center is really a big incentive that is being given to the industry, especially for foreign players to set up data centers in India, because the government has made up its mind that data centers are going to be the main infrastructure on which AI will be there. And the government is acutely aware that in the last 3 to 4 years, in the AI race, where obviously US was a leader and then China was also, maybe China is the bigger leader now in the last 12 to 18 months. India has not found really its feet. Okay. So rather than now just waiting for Indian private sector to do big capex for AI, data center, computing and all that, the government has opened the window literally for all the foreign players to come up and set up data centers in India. So these are pretty big measures. So I'll just take you through one by one in the next 5 minutes. So first of all, 30-year tax holiday has been declared. इसका मतलब ये है, obviously tax holiday means the foreign companies providing these services to global customers as well as Indian customers using data centers located in India, okay, will receive a income tax holiday till 2047. मतलब अपना जो according to the government अब एक अमृतकाल चालू है, and by 2047 we will have a Viksit Bharat. Till then this tax holiday will be there. So this is not a small measure at all, considering this is going to be a sector which is going to boom like anything, which is already booming. To forego all taxation on that for the next 20 to 25 years is a very big thing. And also there are the इसके और दो फायदे हैं. पहली बात तो they will be setting up whether it's a Microsoft, Google, AWS will certainly want to set up a data center here. Also, there will be a lot of skill development in India that will happen with respect to the entire AI gamut, okay, which currently is not there. So that is very, very important. Second aspect, other than the tax holiday, is the infrastructure status. So few months back, when we did the webinar on shipbuilding, at that time we saw that the government gave an infrastructure status to shipbuilding. And after that, obviously we see that the kind of orders that are coming and the kind of uh, you know the kind of growth that we are going to see for more than a decade. So infrastructure status will be granted to data centers as well. इसके सबसे पहले दो फायदे होते हैं. आपको लॉन्ग टर्म क्रेडिट एट अ लोअर कॉस्ट इजीली मिलता है. ओके, so assuming that the foreign players will have Indian partners or they will set up a subsidiary in India, either of these entities will get long-term credit at a lower cost compared to your normal borrowings. Okay, so that's the second faida. Now a deep taxation issue which I'll simplify in 2 minutes is what is a safe harbor for data centers. Okay, and it has been fixed at 15%. Okay, now what does a safe harbor mean? So first let us understand. Okay, so safe harbor means for the Indian tax authorities that particular entity is a no question zone. Now, when I have worked as a CFO earlier, most of the MNCs spend their time, always having a litigation with the income tax department, which goes right up to the Supreme Court, because the any income tax of any country feels that the subsidiary of a MNC is transferring all its profit abroad to the holding company or the parent and not keeping any profits here within India to be taxed by the income tax department. Now, a safe harbor means as long as a data center company is going to add a 15% margin to its costs in India and it's going to transfer the rest outside, it will be a safe harbor. The Indian Income Tax Department cannot challenge this pricing and cannot put any arbitrary taxation on this. Okay, so this is a pretty big move. And again, let me say that putting a 50% is again very low, because earlier for IT services of certain kind it was 17%, certain R&D services it was 24%. So lower compliance, automated approval, and clearly a competitive edge. So over here, we clearly would like to feel that India is going to get some brownie points versus other countries as far as setting up GCCs and data centers in India is concerned.
Thanks, Kaustav. Now, coming to another very important aspect, fiscal deficit, right? So, in sync with the details shared, and maybe we can discuss about the budgetary focus on fiscal deficit. Short term, we can say that anything can happen, but we always have to look at the long term impacts, or at least the direction basis our reading. So, would appreciate your views on that.
Yeah, so I guess this is an important aspect simply because when the finance minister is supposed to present a union budget, okay, they are actually sharing a balance sheet, which means what is going to be the relation between your inflows and outflows over the next 1 year estimated, and then what is going to happen to a fiscal deficit. So India has been a poor country 60, 70 years back, then it has been a developing country for almost 5 decades, and that is why we have had borrowings, we have always needed borrowings. So which means our expenditures have always exceeded our receipts of the government in any particular year. Now the good news is our fiscal deficit, that is finally for what you have to borrow in a particular year, has been in the range less than 5% over the last 3 years, and the government is particular about bringing it further down. Okay. The good news is that the government this year is going to curtail their revenue expenditure and not the capital expenditure. So in fact, we all know that the sluggishness in the economy had come up because of two reasons. In 24-25, we had the national general elections, in which not only the government had to cut down its capex announcements because it is considered pro the ruling party, and they could not even spend in the first 6 months because of the Achar Sanhita. And even in 25-26, what has happened is while they could declare a higher budget compared to 24-25, they have been relatively slow in spending it, because एक बार आपका dent होता है, so it takes some time to recover. Just as an example, in COVID, when we had a big depression in India GDP, it took around 2 years to come back to the normal levels. Okay. Now let's look at against our 4.3. Okay, why are we doing a commendable job? So US has a fiscal deficit which is exceeding 6% and can hit 7% by late 26. France has around 4.5 to 5%. Germany is 4.75%. And even Japan, which had a deflation or a stagflation for so many years, still has a fiscal deficit of 4%. Even in the emerging economies, you have Brazil, which is around 7%. China, in spite of the opaqueness of data, they still are at 4.5% more than India. And South Africa. So these are the BRICS countries, which is again around 4.5 to 5. So in a way, if you look at most of the large economies, and India is almost fourth now, we are well placed as far as our annual fiscal deficit is concerned. Now, what does this translate to? So an annual fiscal deficit of 4%, 6%, 7% may not look big, but just have a look at what it means. So every year's borrowing gets piled up on your balance sheet. As a result, Japan has a debt to GDP ratio of 237% now. Means their debt is 2.3 times of their GDP. For Italy, it is 1.135%. For USA, it is 121%. And for India, it is 55.6%. Central, and even if you consider combined, it is around 80%. So for a poor country becoming a developed country, to now, if you see, overall the fiscal deficit and the balance sheet has been well managed. But even now you would understand that even if we are better than some of the other developing countries, okay, 26% of India's entire budget still goes towards the payment of interest of this 80% debt. Okay. So that's the importance. But this is one reason why institutional investors should broadly be supportive of the budget despite of the F&O tax hikes. And of course, short-term traders are going to be upset, arbitrageurs and all that. But the long-term fiscal math is important, because if we remember in 1991 when there was a turnaround, why there was a turnaround? Because we had reached a stage where we were in a position where we wouldn't have been able to meet our debt obligations. So we are far away from that and respectfully sitting as a growing and a prospering economy now.
Thanks, Kaustav. And small announcement for our audience, like we are doing a Investing 11 Conclave on coming Sunday. So basically 11 practitioners, all very renowned with 2-3 decades of market experience, will be sharing their thoughts, framework, market outlook, and they'll be sharing an idea, right? It would be a 40-minute per speaker session, 11 speakers throughout the day. We have kept a reasonable fees for that. So if anybody from the audience is interested, he or she may register. They can find the link on my handle as well as Alphawealth. And also, like you guys have been very consistent listening to our spaces session. So we have a small giveaway, right? If you check my handle, I have a post on giveaway. So those who are interested can definitely avail this opportunity. So we'll be announcing soon. So if you can participate. So coming to next question, Kaustav. Now this is again very important because everybody in the market, or maybe you and I also as a market participant, has this question to our mind one time or the other, right? How we sail through it is all again about our experiences, our learnings from the market. So as an equity investor, what should be our expectations from the market going forward? The question I am asking comes because from last 18, 20 months, right, we have been seeing कल से सही हो जाएगा या next quarter से सही हो जाएगा, but things are not improving, right? Secondly, these some announcements in the budget are also not supporting. Even the nominal growth numbers have not been conducive. So there are many pointers basis which it is justified what the market is behaving today. But money is always made by making a probabilistic guess for the future, right? How things can pan out 2-3 years down the line. So on those lines, what are your views? Would be good to have your views on that.
Yeah, I think finally this is the question that matters after, because I guess, as we discussed, the union budget is more about the government's balance sheet, how the government is going to do a balancing act between spending, borrowing, and trying to jack up its income. Okay. And obviously, at least, seasoned practitioners like us, you, me, Manthan, we know that, after the two big tax cuts that happened for the salaried class in last budget and then the GST cut, there was very little legroom left for the government to further cut taxes. Okay. So that was almost a given. So as you rightly said, Prince, at the start, it's always good to not have high expectations. Otherwise, from anybody, and of course, the government is always doing a very tough task. So, I mean, the only point was, as I said, maybe with a bit of pinch of salt, that इस साल टैक्सेस नहीं बढ़ाए कैपिटल मार्केट्स पे, वही एक अच्छी बात है. एंड वी कैन ऑल ऑल्सो हैव अ ड्रीम दैट tomorrow we have a capital markets ministry separately, so that it is not clubbed with the fiscal deficit and all that. Yeah, so jokes apart, I guess first I would like to recommend to everybody, there is a book called Mastering Market Cycles by Howard Marks. Okay. And please read that book. It's not a very big book, maybe 300-350 pages, very lucid English. But first of all, the meaning of cyclicality will be well understood. So whether it is an equity market, whether it is any asset class, okay, trees cannot grow to the sky, okay, and there is always something called gravity that has to be understood. Now, talking about the Indian equity markets and what to expect, okay, I would request all of you to look at the index returns from 2015 to 2020. and then 2020 to 2024. Okay. So just to simplify, from 15 to 20, practically there were very little single digit returns at the index level, just because let's say that index is a barometer of the stock market, though many times it is not, but still it's a standard reference point. And then again you had a big depression due to COVID, where the indices fell 30, 35, 40%. And then the market became so undervalued, okay, that obviously the liquidity came gushing into this asset class. And for a long period of 3 to 4 years, things kept on going up. And this was one of the most wide bull markets where, barring one or two, traditional sectors, okay, many new age sectors did very well. Some old sectors did very well. And even, the new age companies which got listed are now at crazy valuations if you look at Eternal, etc. Okay. So my point is, we have had a very strong upcycle, a pretty long one, not for a year or two. And now the cyclicality is going to ensure that the pendulum which was at one end of the swing, okay, just coming back. Okay. And I would say, as a long-term practitioner, Prince, you and I know that the good part is the pendulum is coming back slowly. Okay. Otherwise, if you have a 2018 or even a 2008 kind of scenario, it typically drives out 70-80% of the market participants out of the market completely. Now, how to interpret it for somebody who has started in a post-COVID era, somebody who started trading, investing after 2020-21, because there is their first bear cycle. My simple advice is, first of all, look at your sectors and portfolio. If you are still hanging around in a sector which has done exceedingly well in last 3 years purely out of hope, okay, please book your losses or profits and get out. Because every bull market has one very clear reminder. The old lessons get taught to new investors, that every sector which has a big upcycle, okay, where certain companies can go up 50x, 100x in a span of 3 to 5 years, those prices do not come back, maybe even for a decade. Okay. And so a sector rotation is a must. If you are not going to do sector rotation within your portfolio, if you have already not done in the last 18 months, in spite of being an active participant, then to some extent there is something clearly lacking in the equity approach. It is better to either trust other experts or simply be in mutual funds. Okay. Because just to keep on holding the same set of stocks over a long period of time, okay, not understand what is the top of a stock or a sector, okay, and do a investing of hope, it is always a very bad idea. That's the first thing. Okay. Now, what to expect from the market? Certainly for us, it is becoming a very good market for stock pickers. It is always a stock pickers market, but what happens in a roaring bull market like a 23, 24, okay, the FOMO is very high. Every time you have participate in 3 to 4 sectors and 18, 20 companies, some others are also doing exceedingly well. Now, this market is not going to give you that headache, that problem. So if you are going to research well and find out companies from certain sectors which are turning around, turning for the better, and if you are going to hold them for at least to next 12 to 18 months, you are going to make very good returns compared to what has happened in the last 2 years. Okay. So nobody can predict a market bottom or a market top, but from 2020 to 2024, the bottom of the COVID cycle to end of 24, if the indices itself had a CAGR of 20+%, in the next 3 to 5 years, we can expect the indices to have a CAGR which is in lower teens, okay, which is 10 to 12%. But portfolios can be certainly much more than that. Okay. So certainly this is classical equity investing that is coming. It's been a brutal market for traders over the last 6 months, I believe. And it may not be very different in the near future because typically momentum trading works better in a bull market. But again, I would say, even if you have a trading approach, this is a market where if you luckily got onto something which is in momentum, and it goes up to a 20-30% kind of gain, it is better to book that gain, because we have seen over the last 15 months that anything which has gone up 60% has almost corrected 60%. Something that has gone up 30% in even if a fundamentally great company has corrected completely. So currently the market is brutal. It will take away all the gains even for good companies. And अगर bad companies में आप हो, which are at the wrong end of the cycle, which are not doing well, which are not able to declare good results and handle investor relations properly, then if you feel that a company can only correct 30 or 40%, then a company can also correct 60-70%, that is to be known, and the original price may not come back. So I guess we are in a classical equity investing phase for the next 2 to 3 years. And of course, I would be more than happy to be proven wrong that we have a roaring bull market starting in the next couple of months.
Right. Just one more thing that I would like to add here is focus on the sectors and the companies where rate of change is incrementally better. Don't get stuck on the companies or the sector where the incremental rate of change is in the downward spiral. Right. And usually the winners of last bull run will not be the winners in the next bull run. So we need to be cautious of the things that we are holding, place ourselves appropriately, and then as Costa mentioned, right, we can have a very good returns over next couple of years if we navigate through this phase in a awareness manner, I would like to say.
Yeah.
So Costa, yeah.
Yeah. So, Costa, another very important question, which is, important in the parlance because last 18 months have been more or less not so conducive for the market. So, we certainly like to talk about market valuations, right, after this correction. So, what's your view? And index, obviously at an index level, things can be different, and portfolios are altogether individualistic approach because everyone has their side of understanding of the market or maybe the way they invest, right? But ideally, what should be the portfolio construct in such kind of markets?
Yeah, so I guess the right question, Prince, when we speak about the change in the cycle. Okay, so what does a change in a cycle means? That the prices run way ahead of their valuations as far as companies, sectors, or even the aggregate indices are concerned. And then they need to cool down, they need to come down to a level where again, the smart guys, the big guys find it lucrative enough to put in money with a 2 to 3 years perspective. So as we speak, as of today's closing, where are we on the index benchmarks of their price earnings? Okay. So Nifty 50 is 21.6. Its median of last 10 years is between 20 and 22. So it's already at its median valuation. But the simple average is obviously 24, which is higher. But typically at Alphawealth, we like to look at medians because the weights generally make it a very skewed index if you just look at the PE. Let's look at Nifty Midcap 150. Even today it is at a 31 PE. The simple average has been 28.5 while the median has been 25.26. So seemingly a bit overpriced even now. Similarly, Nifty Small Cap, today's PE is 26.6. Its simple average is 26.2, but the median is 22.23. Okay. So the classic question is, does that mean that these indices P should come down to their average level or much below that to make it mouth-watering? Now that all depends on certain other factors, like one that Prince was alluding to. Okay. For any country, and especially a high growth country like India, okay, having a zero kind of inflation being reported and a nominal GDP which is almost equal to real GDP is never good news. Okay. What that means is that typically we have had scenarios where our real GDP can be 6 to 7%, our inflation can be 5 to 7%, and hence your nominal GDP is 12 to 14%, which is very, very healthy. And that is why, the companies or the aggregates of indices generally report profit growths of 15 to 20%, which is a step up on the overall country's GDP. Now, if your nominal GDP is going to be less than 10%. It is not good news because your earnings growth is going to be a factor of that. It may not be double or triple of that. Okay. So immediate upside to the earnings growth, getting to 15 or 20% as an aggregate over the next couple of quarters may or may not happen. And as a result of that, the valuations or the pricings even seems to be higher at the index level. But again, the caveat in that is, we all know that those who were participating in micro caps, nano caps, lower than that, and SMEs, okay, the portfolios have corrected brutally, well beyond, these index levels, which are still just down 10-15% from their tops of 2024, especially the mid and small caps. Okay, which means that many stocks in the broader market have corrected a lot, and their downside might be limited from a stock or a sector valuation perspective. We have had stocks which had a PE of 60, which are at a PE of 22 now, which means that a forward PE might even be 15 or 14. So in such cases, at the broader market, I feel a lot of correction might be behind us. But then again, we are in this classic pendulum case where when the pendulum swings to one side, it starts coming back. It will not stop exactly at the middle. It will again go to the other side. So we should always be ready that there can be a further correction. Okay. But yeah, I mean, certain sectors and certain companies are at mouth-watering levels in terms of a classic investing framework. And we should be focusing on such sectors and such companies and start adding them slowly. As long as we have the current portfolio in control. A person finds it always very difficult to straddle two things. Okay. If you are sitting on heavy losses on the current portfolio, you will find it very difficult to start adding new companies because psychologically you are trading on to unfamiliar territories. So the current portfolio needs to be rotated first, and it's already a good market to start adding real quality companies which are at low valuations now.
Right. Just couple of things from my end on this part is, right, we have been in the like last week, we in the Saturday Sunday, we have been in the Hyderabad, and a lot of people are coming and discussing. So one common pain point that I think is there is, like, a lot of people are sitting on the huge losses on a particular stock, and now they are like mentally not ready to book that loss because they think that will is the permanent loss of capital for them. Well, the thing that we need to understand here is, if something is down 40, 50, 60%, right, it's already down, right? And it takes almost 100% return if something is on 50% to come back to your own capital. And if you are not sure whether the company you are holding will come to that level again or not, then it's better to book and move to the sector or the companies where you find reasonable amount of growth and the valuations are pretty lower than what the historical averages is. So that's the one point that I wanted to add.
Yeah, thanks, Manthan. I guess in this market, it is very important that we all speak first about our portfolio, current portfolio, what is to be done, because reconstruction of a portfolio can only happen, at a stage when you are in a situation, your mind is free and you are able to look at the future meaningfully. Till both your legs are stuck in the past, you cannot have one leg going into the future. Okay. So another important thing that I would like to share with you, okay, Prince Bhai mentioned, but frankly, at this phase of the market cycle, okay, returns will not come from more and more activity. They will come from clarity. And even after 2 decades in the market, people like Prince, me, Manthan, we still believe that there is a lot to be taken from collective wisdom. Because as they say, history rhymes, it does not repeat exactly. So when you look at seniors, veterans, experts from the field, you always understand they are looking at certain data points which will be different, which are more suited for this cycle. So anyway, इस market में rather than doing more activity without really having a clear direction, it is better to look around and take direction from the sharp minds. And that is precisely the reason why we are conducting the Investing 11 Conclave for you on this Sunday, which is the 8th of February. So over there, we will not have predictions or noise, etc. But we'll have frameworks, thinking in cycles, some very good ideas that can get us very good money in the next 2 to 3 years. That is wealth creation. But more importantly, a nuanced way of understanding how to navigate uncertainty. So over here, we have the best performing PMS manager for the last 2 years in India. We have value investing experts who have 3 decades of experience. So there is Mr. Aditya Khemka, Nitin Dharmawat, Rohit Chavan, Prabhakar Kudwa, Nitin Mangal. So we could talk to all of them, convince them to come together at the same place, okay, for the benefit of our audience, our investing communities. And certainly this is the time when this value will be priceless. Okay, मतलब इसका आपको कितना रिटर्न मिल सकता है अगले 2 साल में या 20 साल में, that can only be looked at in hindsight. So certainly we will all be there, and those of you who want to have a serious, investing ahead, investing years, certainly will get to benefit a lot. So as Prince mentioned, the links are available on our handles, and we surely like you to benefit from this collective wisdom.
Thanks, Kaustubh. And certainly few questions about investor behavior I will like to touch upon, as you guys already highlighted, because we all go through that phase until unless we have some legacy of investors in our family, right? Majority of the participants start small, eh? And they do not know where to invest. Most of their investments are either news based or जिसको भेड़ चाल बोलते हैं, और high pace, the FOMO kind of investing, right? Today, people are discussing gold and silver. 2 days, 3 days of fall on those commodities was also discussed big time. जिसने नहीं लिया, he or she was feeling relieved, और जिसने लिया हुआ था, they were feeling bad. So this is nothing unusual, but a collective human behavior which drives the market. But the bigger question, what we as a market participant ignore is time is our friend, right? Because as we spend more time in the market, continue to invest in stocks or maybe through passive ways of investing, right? We grow our capital base. But as rightly highlighted by Kaustav and Manthan, we should at least be knowing the direction of the market, right? We do not claim to be the god of market or the practitioners who know everything. No, that is far from reality. If somebody is claiming that, that is not true, and we definitely are not in that category who claim that we know everything. But again, over a period of time, when you gain experience, you see market cycles, you talk to people who have seen cycles, right? That network help you at least give some direction, right? uh, then comes the sharpness or hard work from your side that bases that direction, what kind of homework you prefer to do, right? It could be a possibility that you are doing handhold kind of investing, wherein somebody in the family or friend circle is a seasoned investor. He or she helps you. That is not the case with everyone. Second is maybe you are taking some services, be it RA, RIA, portfolio management, PMS, big ticket size, right? Those are another option. Third is, which majority of the participant do is like दूसरे को देख के, या फिर ये अच्छा चल रहा है, ये इतना करेक्ट हो गया, अब यहाँ से इसको दोबारा रिकवर होना चाहिए. Those kind of investing, which in the long term, in few instances can work, but that is something not work ऑलवेज. रीजन बिंग बिकॉज ऐसा कुछ नहीं है कि एक चीज करेक्ट हो गई तो वो ऊपर आएगी आएगी. इट कुड बी अ पॉसिबिलिटी कि वो वहां से भी 30, 40, 80% करेक्ट हो सकता है. एंड एज राइटली told by Manthan ki wo maths फिर वैसा हो जाता है. If somebody bought anything at 100, if that is available at 50, then it needs 100% jump so as to get to your cost, right? But we fail to understand, like throwing more money behind the bad capital is again you continue to average down your losers, right? So until and unless you are very sure about your investments, you should not be averaging down, right? On the top of that, people talk about average upwards or those kind of scenarios. So as Manthan was sorry, Costa was mentioning, this phase has been really different and painful for the traders or momentum traders as well, right? So there are situations wherein those kind of situations are also not happening. You continue to add, even for good stocks I'm talking, continue to add at those levels. From there the stock again corrected 20, 30, 40%, right? Is there any significant change in the business? The answer is no. But sentiment, yes, that has changed drastically. So these kind of nuances are not easy to deal with when you have a finite ticket size, right? You should not claim that I have all the money and I can invest at any point in time. So these are certain things which you can streamline either by doing the DIY investing, learning from the expert, or maybe you can take help from practitioners. And trust me, these last 18 months, I have got so many requests from our, fellow audience participant friends who were doing the investing themselves, and now they are asking, यार कोई अच्छा practitioner, कोई अच्छी advisory बताओ. The reason is simple. When everything was moving, everybody was a Vijay Kedia, right? But now when the market has taken the direction differently, then everybody is, they are looking for what other people are doing, and majority of us, including me, we are very, averse to booking our losses, because पैसा प्रॉफिट बुक करना फिर भी एक बार को आसान है, नुकसान काटना बहुत टफ है. एंड आई अप्रिशिएट दोज लर्न दिस, क्योंकि ये सबसे बड़ी आपकी एसेट बन जाती है आगे चल के कि भाई इफ यू बाय एनी चांस हैज इन्वेस्टेड इन अ बैड एसेट, इट इज ऑलवेज वाइज ऑन योर पार्ट टू कट डाउन योर लॉसेस. So these are few behavioral things which keep on coming to you here and again. अभी 3 महीने में सेंटिमेंट दोबारा हो जाएगा, तो यहाँ जो पार्टिसिपेशन अभी अपना 132 का है वो 600 हो जाएगा, ठीक है. वही फिर मार्केट यहाँ से भी और करेक्ट हो जाएगी, तो हो सकता है और 20-30 लोग कम हो जाए. बट आइडिया वो नहीं है. आइडिया ये है कि आपको मार्केट में लंबे टाइम के लिए रुकना है. उसके लिए जो जरूरी है वो ये है, या तो आपका सॉलिड फ्रेमवर्क हो, या you are with the right set of person, that could be your friend, family or practitioners. उसमें कोई फिर एक्सेप्शन नहीं है. आपका टाइम के साथ एक बेस कैपिटल बढ़ता है, बट ये भी आपकी रिस्पॉन्सिबिलिटी है कि आप उस कैपिटल को ग्रो करें, ना कि डी ग्रो करें. So with that, I think majority of the questions to my mind, Kaustav bhai, are done. But again, if there is more on the budget side or maybe market front, you can certainly discuss or maybe add.
Yeah. So what you briefly touched upon, precious metals, maybe I can give my thoughts for a few minutes. Okay. So again, precious metals, commodities, इनका जो बुल रन आता है तो बहुत अच्छा लगता है. But the kind of price action that they can have, the good, bad, ugly, equity investing seems like sainthood. मतलब संत लगता है. Okay. I guess one of the famous investors, Jiten Parmar, was quick to comment on Saturday when silver fell by 38% in one day. Okay. कि not only can equity portfolios or a stock not fall on 38%, but his portfolio has also never fell 38% in 1 year. Okay. So एक दिन में अगर ये सकता है तो that was a historic one. And just you can see at the numbers, gold went up from $2,000 per ounce to 5,400, 170% appreciation over 2 years. And in then 3 days it has corrected 13%. But if you had got in at an original cost of $2,000, this was 35 to 40% gone in 3 to 4 days. और सिल्वर तो obviously is more volatile, तो उसका मतलब भी आपको समझाता हूँ. From $33 per ounce just 6 months back in June, it shot up to $117, okay, which is 3.5 times in a matter of 6 months, just till last week. And then it has cracked, like it is up 255% in 6 months. And it cracked when this 38% etc. happened. If you had entered at $33, then you lost 120% on your capital in one day. Okay. So it is certainly not for the faint-hearted. So we had done a complete webinar on how to handle precious metals. So a simple formula that we had thought about based on the last 6 decades of these cycles is, especially in India, where the INR depreciation versus the dollar also adds certain percentage points to the return from gold and silver. Okay, so we are slightly better on the return. Always look at the last 5 years rolling CAGR, price CAGR of these two. Okay, whenever they, rather I would say gold, my mistake, not silver. On gold, when you see that your 5-year rolling CAGR goes, say to 5% or below 5%, then it might be a time to start looking at it कि मैं add करूँ या ना करूँ, if you want to be opportunistic. Similarly, when a rolling 5-year CAGR for gold becomes 15% or crosses 15%, then for an opportunistic investor, it might be the time to reduce the allocation a bit. We don't never recommend that you have a perma bull on gold or something, because gold can have at various times periods of 7 years to 12 years when the price did nothing. So for any kind of investor, whether a FD guy or a equity guy or any kind of guy who basically needs some annual return, okay, और इक्विटी तो हम रोज प्राइसेस देखते हैं वैसे, उसके लिए that time in gold can be like living in a jail. Okay, so personally I would say it's good to be opportunistic as far as gold as a financial asset is concerned, because we Indians are always loaded on physical gold. That is the belief. Okay, of course with some degree of variation. On silver, I would say that anybody who has an investor kind of mindset should ideally stay away from silver. This was the first silver cycle in our mature years that we have participated in. उसका एक रीजन था कि जून टू सितंबर 2024 में we realized that equity and its valuations and prices are really look very ripe for a big correction. So we booked out to quite an extent, and then at that time we were taking some positions in silver. It is there on our Twitter handle through the second half of 2024. What we are looking at gate prices of silver when we have taken positions, etc. And frankly, we were able to ride this rally, but we attribute more to luck rather than skill. And generally, skill is repeatable, and luck, as we know, can go both ways. So those were my few points about the precious metals. यहाँ से आगे क्या करना है? यहाँ से आगे अगर आपको अभी तक मैंने जो बोला वो पता नहीं था, तो better to stay away from it.
Perfect. I think we had a very good discussion today, and always gives us pointers to further dig deeper and find out things. The comments which we get from our audience also help us get to the perspectives. So thank you everyone for this wonderful session. And once again, like the session, the kind of practitioners who will be coming for the session are very renowned. They have seen market cycles, 2-3 decades of experience. Basis that the fees for the session overall has been kept pretty low, so that everybody who is interested can have access to that. And the session will be recorded, and its recording will also be provided to the subscribers for a year. So at any point in time, the talks, the framework, the thought process behind those ideas is important. We are not here claiming that कि यहाँ कुछ जादू हो जाएगा या वो ऐसा ज्ञान देंगे कि कल आप करोड़पति बन जाओगे या करोड़पति हैं तो आपका 10x हो जाएगा. बट डेफिनेटली जो सीरियस इन्वेस्टर्स हैं उनके लिए अच्छे आइडियाज और उन आइडियाज को इस मार्केट सिचुएशन में कैसे देख रहे हैं वो थॉट प्रोसेस इंपॉर्टेंट है. और आइडियाज भी अगर शेयर हो रहे तो दैट डजंट मीन कि वो किसी प्रकार से बाय सेल रिकमेंडेशन होगी. ओनली इंटरेस्टिंग पॉइंट अबाउट दोज आइडियाज इज कि डिस्पाइट दैट पेसिमिज्म इन द मार्केट, why that particular idea has been chosen by the practitioner. और एक प्लस पॉइंट क्या होता है, अपना जो मार्केट पार्टिसिपेंट्स हैं आप लोग, सबका इन्वेस्टिंग स्टाइल डिफरेंट है. 11 प्रैक्टिशनर्स में आप देखोगे किसी का स्टाइल वैल्यू इन्वेस्टिंग है, किसी का ग्रोथ है, कोई फोरेंसिक एक्सपर्ट है, किसी का डिफरेंट है. तो एक जो मिक्स मैच होता है वो आपका जो फ्रेमवर्क या आपका थॉट प्रोसेस है उससे मैच करता है. You need not need 11 ideas or maybe more than that. You simply need one good idea from any of the practitioners who you think कि आपके थॉट प्रोसेस या आपके फ्रेमवर्क को मैच कर रहा है. या ये भी जरूरी नहीं है कि उनका आइडिया आपके लिए यूजफुल डायरेक्टली और इनडायरेक्टली भी हो सकता है कि if somebody is talking about one theme, why he or she is discussing about that particular thing. So ideas of doing these session is at least uh, in our capacity we ourselves benefit a lot, right? That also gives us a point from where we start our uh, due diligence. And again, those who have subscribed will definitely be cherishing those. So these were small pointers I wanted to say before we close the session. And one more point, like there are investors who are not here for very long, and at times they ask for some discount or those kind of things. If someone is of that type, he or she can reach out on DM in particular. We will see if we can do something for that. So with that note, I hand it over to Kaustubh and Manthan, and we are good for the day. Thank you. Good night.
Right. Thank you so much.
Thank
Just
you.
the last thought. Ideas are very abundantly available on X or everywhere, but the work that goes behind the idea that gives you conviction is very rare. So with that, let's close the space for today. Thank you so much for joining in.
Yeah, thank you. See you again. Bye.